Okay. Good evening, everyone. Welcome to the presentation of the 2015 audited financial statements of the Galaxy Towers Condominium Association. The presentation will be presented by Mike McGee and Grant Delatorre of Becker Delatorre Guido & Company. These gentlemen are to my right, your left. Also at the dais is our treasurer, Galaxy Towers Condominium Association Treasurer, Joe Purcell. And to my left, your right, is Marissa Pole of Cipolla & Company, Tom Ferreira of Cipolla, and Joe Cipolla, President and CFO of Cipolla Accounting. So with that, I'll turn it over to Mike, who's going to make the presentation. Following the presentation, there'll be a brief question and answer period on the contents of the presentation. Following that, we'll start regular monthly open board meeting at approximately 8:30 p.m. Okay, thanks. Okay, Mike.
Thank you, Frank. Once again, by way of introduction, my name is Mike McGee, and I am an audit partner at the CPA firm Beecher Delatorre Guido & Company CPAs. Our firm is located in Ridgewood, New Jersey, in Bergen County. We've been in existence since 1982. And as you all know, we are the independent accountants for the Galaxy Towers Condominium Association, Inc. Audit. I am the second reviewing partner on the Galaxy account. Many of you may know Neil Delatorre, who is our managing partner, and he's also the head engagement partner on the Galaxy account. Neil had an unexpected family matter to tend to this evening, so I am stepping in his shoes. Also joining me, as Frank had mentioned, is Grant Delatorre, who is our engagement in charge on the Galaxy account. Before we get started, we just wanted to thank the board, management, and the Galaxy accounting team for all of their assistance and cooperation throughout the audit engagement. What I'd like to do first is provide you with just an overview of the audit process and a walkthrough specifically of our audit opinion, which is on screen right now. As our audit opinion indicates, we have audited Galaxy's financial statements, which comprise the balance sheet, statement of financial position as of December 31st, 2015, and the related statements of revenues and expenses and changes in fund balances, your income and expense, and cash flows for the year then ended, as well as the required footnote disclosures that accompany the financial statements. As our audit opinion indicates, we opine on management's financial statements. Management is ultimately responsible for the preparation and fair presentation of the financial statements in accordance with U.S. generally accepted accounting principles. Our responsibility is to express an opinion on your financial statements based on our audit, which we conduct in accordance with U.S. generally accepted auditing standards as promulgated by the American Institute of Certified Public Accountants. And what those standards require us to do is to plan and perform our audit so that we can obtain reasonable but not absolute assurance about whether the financial statements are free from material misstatement. In terms of what is involved in an audit, what an audit involves and what our audit involved is performing procedures designed to obtain audit evidence to support the amounts and disclosures in the financial statements. These audit procedures include tests such as external direct confirmations with third parties, such as the various banks, investment firms, review of supporting documentation for appropriate authorization and expense categorization of disbursements that are made from Galaxy, review of contracts. Now, as you may know, a lot of the expenses at Galaxy are based on contracts, so we do review and examine the underlying contracts as support to substantiate expenses. Review of payroll information. On the revenue side, we do compare revenues to budget and we verify that the revenue that's reported was computed in accordance with Galaxy bylaws. Another component of the audit is that in performing our audit, we consider internal controls here at Galaxy that are relevant to the association's preparation and fair presentation of financial statements. That helps us design the audit procedures that we need to perform in order to ultimately render our audit opinion. Although we do consider the internal controls, we do not express an opinion on the effectiveness of the association's internal controls. But a couple of the significant and key internal controls that are here present at Galaxy, one example would be monthly financial statements are now prepared and reviewed on a monthly basis. And there's a very active and involved board that's involved in the financial accounting oversight function. As you can see, ultimately, as part of our audit opinion, we do render an audit opinion, and based on the audit procedures that we do perform, we believe that the audit evidence that we have obtained is sufficient and appropriate for us and our firm to provide a basis for an unqualified audit opinion. If you could just scroll to the next page, page 3 here. One of the things that specifically wanted to discuss and review with you is one of the required reports on supplementary information. So what U.S. generally accepted accounting principles requires is there to be supplementary information on future major repairs and replacements to supplement the financial statements. And this concept of funding future repairs and replacements is a gap disclosure that is unique to condominium associations. And this supplementary information is actually included on page 11 of the financial statements. So, Ayad, if you wouldn't mind just jumping to page 11, we can just provide on the screen that schedule. It's going to be further.
Page 11 in terms of page
Yeah, it's going to be a little bit further down. So if you just hit the down arrow, next page. There you go. So as you may know, the board has been primarily commissioned to maintain the common areas of the property. Part of that responsibility is to make sure that future repairs and replacements related to the common areas of the property are properly identified, as well as to ensure that funds are accumulated for future major repairs and replacements. So this is performed through a study in which all components of the common areas of the property are identified and the estimated remaining useful lives and funding requirements are determined. Again, this is something that's unique and required in accordance with generally accepted accounting principles for common interest realty associations, aka condominium associations. What's important to note is at December 31st, 2015, there's approximately $4.5 million in funds that have been appropriated for future major repairs and replacements. And as you can see on the schedule, the estimated 2016 funding requirements for some of these projects are approximately $3 million. So accordingly, the funding appears to be adequate to meet future needs over the next year. With respect to the other supplementary information that are included within the financial statements, I guess starting on the next page, specifically included within pages 12 to 16 of the hard copies of the financial statements that everybody has, you'll notice the supplemental information, the first schedule being the schedule of the budget to actual on the revenue side, and then similarly with the operating expenses. So what we do in conjunction with our audit is we make certain inquiries of management and we evaluate the form, content, and methods of preparing this supplemental information and schedules to determine that the information complies with U.S. generally accepted accounting principles. And what we do is we compare and reconcile this information to the underlying accounting records that were used to prepare the financial statements. What I'd like to do now is just share with everyone just some of our required communications that we are required under our professional standards to communicate at the conclusion of our audit. The first item pertains to communicate to everyone that we encountered no difficulties in performing and completing our audit. The cooperation of the Galaxy board, management, and the accounting team was excellent, and played a key factor in assessing the environmental internal controls as strong from our audit standpoint. Also, for purposes of our required communication under U.S. generally accepted auditing standards, a disagreement with management is defined as a financial accounting, reporting, or auditing matter, whether or not resolved to our satisfaction, that could be significant to the financial statements or the auditor's report. And we are pleased to report this evening that no such disagreements arose during the course of our audit. There are no other significant findings or issues that are, in our professional judgment, significant and relevant to be reported to everyone here this evening. I'd now like to turn part of our presentation over to Grant Delator to provide you with a brief recap of some of the financial highlights included within the financial statements. But before doing that, what I wanted to do, Ayad, if you could jump to further up, maybe it's probably going to be page 4 of 19.
Which page, 4?
4, actually, no, it's going to be maybe 6. If you scroll down a little bit. So, revenue, as many of you may know, is a function of the annual budget as determined by the board.
So what page, what is it?
This is going to be on page.
That's not 6.
6.
Page 4. It's going to be page 4 in the hard copy.
Sorry.
No, that's okay.
Yes, it's 4.
So, revenue, as many of you know, is a function of the annual budget and as determined by the board. And one thing to note, if you take a look at the operating fund column, is that revenue for the year ended December 31st, 2015 was sufficient to cover operating expenses for the year. You can see there's a net surplus, excess of revenues over expenses. And accordingly, Joe Purcell has informed us that there is sufficient funding and no special assessments are required this year in 2016. So I just wanted to make note of that especially. I'll hand it over to Grant.
Page 5 of 19. Hi everybody, my name is Grant Delator. I'll take you through the balance sheet first. First, in the current assets, the
Can
cash.
you have the microphone? Can you talk into the microphone?
And let us know which page you're
And
on,
what
please.
physical page is that?
This is
Fine.
page 3.
Page 3.
Page 3 of the PDF, just 3 to the bottom.
Page 3.
Got it. Got it.
I read it.
Yes.
Yes.
Thank you. Okay, again, current assets, first you have your cash in the first line, roughly $973,000 in the operating fund, and you have $4.5 million in the replacement fund. Now, we confirmed all your cash with the respective financial institutions to ensure they were accurate. Cash in the escrow account, that is your 10 security deposits that's being held by Galaxy, it's an asset. And your investment at fair value of 132 is a brokerage account with Merrill Edge. Your other receivables of $34,000 approximately represent insurance claim receivable, which is an insurance claim that Galaxy expects to receive. Jumping down to prepaid expenses, the $68,802, that's mostly comprised of prepaid insurance paid to IPFS Corporation. If you jump down to your liabilities, as you can see, in current liabilities, the most significant account is accounts payable and accrued expenses. Now, what those represent are amounts that are due to vendors that were incurred prior to or at 12/31/15, but not yet paid in physical cash. Jumping down to your prepaid assessments, the 348, That's a maintenance paid in advance. Down a little bit, current portion of the union pension liability, withdrawal liability. Now, you'll notice that down non-current liabilities, you have the unit pension withdrawal liability, also 1.2 million, and then you have the 88. When the Galaxy seceded with the union, it was a statutory requirement that this amount be paid over time. So the 88 represents the amount you'll pay next year, and the 1.3 million represents the amount that is still owed long term. You can see note 5 for further detail. Also, the unit owner escrow deposits, that is also your security deposits. It's both an asset, as you can see up top in the cash escrow, and a liability. That is because they're holding cash, which they have as an asset, yet they still owe you that cash when you, whatever. So that is both there. And you can see that in further detail in note 6 of the financial statements. Also important to note that there is no bank debt. The Galaxy does not have any bank debt, and as well as not leveraged to any financial institution.
Just to chime in there. So, as we mentioned earlier, the financial statements are reported under U.S. Generally Accepted Accounting Principles, also known as U.S. GAAP. And what that means is that the financial statements are prepared on the accrual basis of accounting. So what that means is that revenues are recognized when they are earned rather than when the cash is received, and expenses are recognized and reported in the period when they've been incurred rather than when they are paid. So when you see accounts payable and accrued expenses, for example, as Grant had mentioned, those represent the amounts that are payable to vendors. Either the invoice has been received and it's been reported as a payable to that vendor as of December 31st, or to the extent that an expense had been incurred but the invoice had not yet been received, the appropriate accruals have been set up to establish that liability at year end. So what we do as part of our audit is appropriate cutoff testing. We'll review subsequent cash disbursements that are paid to vendors to ensure that, you know, is it an expense that related to the period which ended December 31, 2015 or subsequent? And if it was a 2015 item, certainly we want to ensure that that expense has been recorded and the liability established as of year end. So it's just a brief overview of accrual-based accounting and some of the cutoff tests that we do perform. Another thing is that the receivables are reported net of an allowance for doubtful accounts. So that's an estimate that we review with management and have not taken exception to the estimates that have been made by management and the accounting department pertaining to that.
Okay, next, if you look to the next page, it says 4 at the bottom. Statement of revenues and expenses and change in fund balances. There's really not very much to tell here. As Mike mentioned before, the revenue is within the budget, within less than a 1% variance, so it's very much what management expected it to be for the year. If you flip to page 12, again, as Mike mentioned, there's further detail on the revenue. Likewise, with the expenses, actuals are within less than 1% of budget. And if you flip to page 16 of your hard copy, you will see further detail on that. I believe it starts on 13 and ends at 16.
So what happens is, now you have your core, call it your income statement, your statements of revenues and expenses, where you have your operating fund and your replacement fund and the revenues and expenses pertaining to each fund. So that core financial statement is one of those financial statements that we opine on. That's on page 4. And then as Grant had mentioned and we addressed previously, within pages 12 to 16 towards the back of the financial statements is that supplementary information which provides you with further details in terms of the components of the revenues and the operating expenses in terms of what the actuals were for the year and then comparing them to budget. So, what the audited numbers represent is that the revenue that was reported for the year and the operating expenses were both less than 1% of a variance compared to the budgeted amounts that were set out by the board, I guess, at the beginning of the year.
Just a little further on operating expenses, some major contributors to operating expenses are contractual obligations, stuff like front door services, security, custodial staff, things of that nature. That was approximately $3.9 million of operating expenses, or 30%. Maintenance operating expenses was approximately $1.8 million, or 14%. And utilities, your electric, water, etc., was approximately $4.1 million, or 31%.
Which page is this one? The 16?
This is just on my notes.
Oh, you're not.
Yeah.
So, yeah, again, Grant was just providing some of the significant components of what the operating expenses were for the year. And as you may know, a significant portion, as Grant mentioned, are contractual. You know, there are contractual agreements with third parties. And again, as mentioned earlier, as one of the audit tests that we do perform is to review the underlying contracts and agreements to ensure that the expenses that are being reported on your statement of revenue expenses reconciles back and can be substantiated. What we do as auditors is, we perform substantive testing on account balances and transactions to ensure that the amounts that are being, management's financial statements and the amounts that are being reported to us as the numbers that are ready for audit, we do the appropriate test to gain enough audit evidence and to perform enough substantive testing to render our audit opinion. So you do have your core financial statements, and then as we had mentioned, there are notes to the financial statements, the narrative, which just provides you with an overview of the Galaxy's key accounting policies. It gets into some further details of some of the balances that are reported on the balance sheet, for example. Notes 5 and 6, as Grant had mentioned, will give you some further information pertaining to the the unit owner escrow deposits as well as the union pension withdrawal liability. So it's always good to review the note disclosures in conjunction with the core financial statements, because it gives the reader further information to help them get a better understanding about the the financial performance and results of Galaxy for the year. With that being said, we'd be happy to address any questions that anyone may have. Frank, do you want to kind of moderate that, or not?
Okay, you want to have a seat?
And what we're going to do, we're going to kind of team up with the accounting department to help answer as many of these questions as we can. Sorry.
Okay,
One of these.
so then we'll see.
Okay, and if you would, please, limit your questions to those that pertain to the audit and no other business. We'll have a regular board meeting, as I said, at 8:30. Yes,
Okay.
Lisa.
Okay, I will quote, and then it was on the weekly update something, and I will read it how it was put on the weekly update, and then the question, okay? So, hold on. In the weekly update of February 12, 2016, and at an open board meeting, Galaxy homeowners were informed that the Mall Merchants Association and the unit owner at the mall had been filed lawsuits against the GTCA concerning maintenance of the common elements that impact the mall at the Galaxy. There are also issues in the Mall Merchants Association complaint concerning the sharing of electrical power and the operation of the parking facilities. And now my question. In light of the foregoing and the statement in the weekly update that it is possible that the association may have to defer certain of the claim with its own legal counsel, why is there no footnote recognizing these lawsuits and the possible financial impact that they may have on the GTCA?
So one of our audit procedures.
For the sake of the video, if you don't mind, just briefly summarize the the essence of the question.
Sure,
And then
so
the answer.
if I understood the question correctly, the lady had brought up a question pertaining to some recent litigation that had developed from the mall of Galaxy. So as part of our audit testing procedures, we of course obtain representations from legal counsel. So we did obtain a representation from external legal counsel that had been utilized by Galaxy. I can't necessarily get into the specifics. I don't believe I'm authorized to discuss that with you, but legal counsel in their response to us did inform us that it was the determination of the probability of an unfavorable outcome, nor the amount of any potential unfavorable outcome, that it was too early in the process to inform us of that. Again, it was a 2016 item. So it would be a subsequent event. It may become more of a significant item during 2016 in the current year's audit when that does take place. But we did obtain representation from legal counsel who did inform us that subsequent to the 2015 financial statements, this had transpired, but it was, neither, the probability nor amount could be reasonably estimated at that point in time.
But when I asked you about the footnote, it was only to mention it. I didn't ask you to put a number on it at this point. So by next year, whenever you bring, then we know that this is an open item, and it's through the note. What is a note? Footnote. It is a more clearly explanation of the accounting for those people who don't understand accounting. And this is
Okay,
a big...
I'm going to have to stop you. He did answer the question, and you're debating the judgment that a certified audit firm, that a CPA firm made with counsel's recommendation. So unless you have another question, I'll move on to other people in the audience that may have other questions about the 2015 audit. Thank you. Yes.
Grant, I believe you, if I heard correctly, I believe you made a statement regarding the pension liability for our employees who left us. My understanding from past year's meetings, and perhaps Richard Miller, if this is correct, can let us know, because he's been on the board for a while, is we built up pension for our past employees. The pension stole $2 million of the money that we put into it. We are now repaying that money for a second time. So it's not pension that we paid to employees who left, it's pension that we're paying a second time. Is that correct, Richard? Something like that?
Yes, it's correct.
Not exactly. I don't want to explain
Again,
it. Maybe
I'm going to
someone
have to
else
call
can
order
explain it.
here. These are our certified public accountants that audited our 2015 books. If you have questions for the auditors,
Then
please do. If you'd like to have conversations.
I'm asking
with-
for a clarification.
Okay,
A statement was made.
Let's let the auditors answer the question, please.
If you were to look at note 5 within the disclosures on page 9, it provides you with an overview behind how that liability balance on the balance sheet grows.
Okay, so it does say 2006. So it's not pension that we owe current employees because they left. It's
No,
from a
this
problem
this
back then.
dates back to 2006,
Thank
at
you.
which point in
Thank you.
time the amount of that withdrawal liability was determined and reported on your balance sheet. And then, there's remaining principal payments that need to be made in conjunction with that, and basically that's what that liability represents. It's not anything new. It dates back to about 10 years ago.
Right, thank you.
We have 10 more to go. 20 years.
Okay, any other questions? Okay, going once, going twice. If there's no other questions, then that concludes the presentation of the 2015 audit. Thank you, gentlemen. Our regular meeting, open meeting of the board will start at 8:30 p.m. Thank you very much.